Hey gang, Dennis Tubbergen here. It is Tuesday, April the 24th, 2018. I've got another market update for you. Today I want to look at the US dollar, and to do that I'm going to use the US dollar index. Symbol is DXY. If you're not familiar with the US dollar index, it tracks the purchasing power of the US dollar against the 6 major trading partners of the United States. As we often do, I'm going to analyze this market in multiple time frames. I'm going to start with a monthly Japanese candlestick chart. If you're new to the market updates, you know that a Japanese candlestick chart is really my favorite type of chart to use when analyzing a market because you get so much information from the chart. Every bar on that chart represents 1 month of price action on a monthly chart. Of course, on a weekly chart it represents a week, and on a daily chart it represents a day. The green bars on the chart represent months that the market went up, and the red bars represent months that the market went down. The wicks on the chart show the range of price in that month. So if I were to, for example, look at this bar at the peak, we see that prices opened here at the top of the red bar, closed here at the top of the red bar, and intra-month it reached the top of the wick. So again, there's a lot of information here. I've drawn 2 trend lines on this monthly chart relating to DXY. You see that essentially it's forming a pennant formation going all the way back here to 2015. This is really about a 15-year pennant that's been forming. So not a lot of information available here on a monthly chart. However, if I flip it over and look at a weekly chart, I get a lot more information. I see that really since 2015, going back almost 3.5 years now. Here is a megaphone pattern that we had been tracking that actually turned out to be kind of interesting here because we saw prices break through the bottom of the megaphone, and now just recently this week back above into that megaphone. So that could mean positive price activity for the US dollar near term. In fact, if you look at a daily chart, it even becomes more obvious. This is a price trend channel, downward price trend channel that I drew on DXY and used on a prior market update. This goes back to late 2016. And if you look at all the price action, you'll notice how all the price action is contained between the 2 parallel sloping from top left to bottom right trend line. So this is what we call a downward price trend channel. All the prices are contained in this channel, really going all the way back, as I said, well over a year, almost a year and a half. However, look what happened just last week. Last week we saw prices break to the upside of that price trend channel, a price breakout. There's always such a thing as a false breakout, but looking at this, the odds are, I think, for potentially a US dollar rally. That could mean that gold maybe stays below its current level of resistance, which is pretty strong. We covered that in a prior market update. So at this point, adding gold positions may be something that you want to do very cautiously, averaging in. And it looks like we could potentially be looking at a US dollar rally. That's today's market update. I'm Dennis Tubbergen. It is Tuesday, April the 24th.